Welcome to TheoTrade. This is Don Kaufman. It's August 20th, 2025. 5 minutes to go to the cash close here on this Wednesday afternoon. With the markets, they're just all over the place. Look, as a trader, you got to absolutely love some of the conditions you've seen over the last 2 days of trade. I know as an investor, you're going to be a little concerned, but as a trader, this is what we live for, people. Buy the dip or fade the rip. You don't know which way we're actually headed. Let's get right down to it here. Of course, on this TheoTrade evening video, there's a couple critical points that we're going to discuss. We're going to talk about S&P levels. We're going to talk about the SPX, the expected move. Of course, we'll throw a little Jackson hole on the side of that. And then one of the outliers over here, you notice that volatility, it's not moving. Let's start to actually break it down. So here we are, a few minutes left in the trading session. Things got they got a little crazy. I got a little crazy this morning. There was heavy sell side activity out of the gate this morning, taking us all the way down to 63.62. But it's not how you open, people. It's basically it's where the puck is going. It's how you close. And where are we right now? Rallied all the way back to 64.22. Which, to begin with here on this evening's video, when you're kind of asking that question, are you going to buy the dip? Everybody's like, the dip buyers are out. Well, maybe inside of the S&Ps, but and yes, inside of the NASDAQ to some extent, but the NASDAQ is still down about 0.5%. And over the last couple of trading sessions, it's getting ugly out there. It is. It's getting ugly out there. Now, before I go too deeply into the NASDAQ, let's talk a little about the S&Ps and the levels in the S&Ps. I'm talking about levels. Okay, one of the things I like to do, I'm going to go to a 180-day 4-hour chart. Okay, and I'm just going to zoom in for a moment just to make kind of a critical point about trade. All right, freeze the screen here for a second. All right, we hopped into a very specific set of levels here in the S&Ps, and we did that literally in like late June. And we've kind of been boxed into these levels. I was talking about this while on TheoTrade this morning, but this is, it's essential, it's critical to me, and I want you guys to actually know this. So, okay, the levels that you're looking at on the screen right now, almost all of the trade, okay, that has occurred in, well, since literally back here in like late June to present time, and here we are in mid to late August. You've got basically like 6-7 weeks of trade. You've been boxed in from literally 62.50, okay, to nice big round numbers. We're going to call this, okay, 64.50. That's it. It's a 200-point range. We've been kind of channeling back and forth. Got it, get it, good. Only a brief and fleeting moment, okay. We did, in fact, break outside, okay, this kind of volatility box. And I have to tell you, I'm rather surprised when we did break outside the volatility box that we didn't explode higher and then maybe pull back into it. We didn't explode higher, okay? We kind of moderately broke outside the vol box, drifting listlessly, and here we are back inside of it. What's critical at this point, kind of moving on, okay, is just that. Take a look at the levels, if you will, right? You break above 64.50 at this point, it's wildly bullish. I'm going to say that again. If you break above 64.50, and we are close to it, wildly bullish. Literally, it's like a door swinging wide open to the upside. Everything else right now, okay, is inside the box. Obviously, breaking through 62.50, okay, which we literally touched, just a couple of weeks ago, would be incredibly bearish. Everything else, okay, is inside the volatility box. That's it. Right? There's no if and or but about it. We either explode higher, we break, okay, and obviously can crash and burn below that 62.50. Be aware of those big kind of marquee levels. And again, I'm not nailing this down to the exact point over here. These are big, broad strokes that I want you guys to kind of look for. All right, so volatility kind of feels like it cracked wide open, but there's some areas of like contention because what we're really seeing is like rotations. You realize we've been kind of rotating into the Dow. The Dow itself, where is it? I mean, let's start screaming, all-time high. I mean, like, again, you literally hit like an all-time high in the Dow. And, we're talking about, the markets could possibly break down over here. Not in the Dow. Look, we rotate until we don't. And it's one of the critical things. So you have the S&Ps right now down 20 handles, right? You got the NASDAQ down by 0.6%, 140 handles. Do realize the advanced decline line is positive. So right now, all we're seeing, and I want to be clear about this, all we're seeing is a move away, okay, from magnificent tech. I don't like Magnificent 6, Magnificent 7, forget all that crap. We're seeing a movement like away from magnificent tech. And one of the big hits that the marketplace took is specific to Meta. This is actually one of the biggest bounces too. Meta at one point, okay, was like 2.5 standard deviations out. This thing rallied all the way back up. It's almost massively unchanged. But we're seeing this rotation out of tech. What you want to look for in the marketplace, the advanced decline line. This is a dangerous place to kind of live. There was a point today where the S&Ps were down over 50 points and the AD line was 50-50. You don't want to see that kind of crap because I'm going to tell you right now, okay? There's the bell. It's all over, people. You don't want to see this kind of crap when there's a 50-50 advanced decline line and the S&Ps are down like 1%. Why? Because at that point, what can happen is tech, right? It's a rotation out of tech. That rotation out of tech all of a sudden will spread like wildfire. The way I was explaining it earlier today is tech right now is like the Death Star. And it's so big that it's got gravity associated with it. So when tech starts to sell off by 1.5 or even 2%, at one point it was down, that much today, all of a sudden what it's going to do, it's going to snap this advanced decline line in two and cause everything to fall. And we're going to go from this non-correlated state, okay, to pure correlation. So think about this non-correlated state. Look, this crap is important. It's 60-40 with the S&Ps down 20. Does that look right to you? You're like, oh no, he makes a pretty good point over here. Just like a few minutes ago, there were 70 advancers. Literally, there were 70 advancers, okay, a few minutes ago. And the market's down. Not massively, not even close to massively. It's way off the lows, but the market's still down. Got to be really careful because this non-correlated state, okay, leaves people with a kind of false sense of security. This is sometimes one of the most dangerous positions you can be put in because, again, you had a position today. We were 50-50 AD line with the S&Ps over here down 1%. All you have to do is snap the advanced decline line. Next thing you know, S&Ps are down 3%. You're like, oh, we're down 60. Oh, we're down 120. Oh, we're down 180. That's the same crap that we saw a couple of months ago. Like that's when volatility gets crazy. Speaking of volatility, if you're kind of looking right now and you're thinking to yourself, it's okay, volatility's not moving, okay? Volatility is kind of known as a short fuse. Volatility agrees with my sentiments. What are my sentiments? The advanced decline line is positive, okay? There's no, there's a little chum in the water, but there's not outright fear. Until there's outright fear, okay, nobody's running to buy volatility in here. In fact, if you look at VVIX, this is kind of ironic. Volatility of the VIX went down slightly today. Go figure, right? Because the assumption right now is that we're going to continue to rotate, that it's not like a full-blown sell-off. It's just a little like profit-taking, if you will, inside of some of the big tech. Myself, I don't really buy that, okay? Because here's the bottom line. If that profit-taking turns, into real sell-side activity, okay, it doesn't matter what you think. You got NVIDIA, whatever. It ended up massively unchanged today. NVIDIA, okay, isn't unto itself, it is the Death Star. I mean, this thing falls tomorrow and it's over. You have some marquee stocks also really getting whacked, okay? Like Palantir. If you guys haven't looked out at Palantir, talk about a wild chart over here today. Look at that move. The stock basically finishing down about 1%, but literally, if you take a look at the expected moves at one point, this thing was like 3 or 4 standard deviations out. I mean, wild crap going on inside of Palantir. So I gave you some S&P levels. Okay, talked a little bit about why volatility isn't necessarily moving. Okay, we looked kind of at this rotation, but the QQQ, and again, the QQQ is just sitting at the lower edge of the expected move. So, all right, obviously people are going to be worried about, what about Jackson Hole? Okay, what about Jackson Hole? What do we really need to know? So the volatility is slightly elevated into the latter portion of the week, but not by much. I mean, the S&Ps moved over 60 handles today. And in the next 2 days, this is till Friday's expiration. In fact, I'm going to highlight this because I want you to see it right over here. Still only pricing at about $62 a movement. That's equivalency of, well, not even a 1% move. So the markets right now, okay, they got a little volatility pickup, but they're not really pricing in. Again, that doesn't actually leave me warm and fuzzy. At this point in time, I'm looking at the rotations, okay, very carefully. I'm watching the advanced decline line. We're going to see if we're actually going to cave in. The last thing, okay, to kind of look at is today we flirted right on the lower edge of the expected move. This is also going to be a very critical level for the S&Ps. This is not so far out in time. This is literally between, Thursday and Friday, okay? SPX 6360. That's the lower edge of the expected move. We flirted with it. We almost flirted with breaking off of it. All hell could have actually broken loose today. But right now, we held it together. We rallied up to some extent. Look, the SPX still finished down 15 handles. Okay, we're a little bit more than halfway home to the lower edge of that expected move. But that level, and again, it's specific to the SPX, is 6360, people. Get a handle on it because you start to trade beyond that. Okay, and that's the market literally ripping itself apart at the seams. But the SPX, as I said a moment ago, the volatility isn't all that extreme. Look, there's a lot to think about. Okay, push aside a lot of the rhetoric going on right now. Jackson Hole, who cares? You know what? Jerome Powell, he's going to come out. What is he going to do? See his own shadow? A couple more weeks of winter? Like it's impossible to kind of quantify what that order flow is going to be. Okay, what's he really going to do? He's going to come out and try to do absolutely nothing. Dance, monkey dance until you're out of there in in a couple of months. That's Jerome Powell's whole theme. But even if he does tip his hat to lower interest rates, how do you talk about lower interest rates without also discussing the fact that the economy could be weakening, right? So this is going to be a very, very fine line that he walks in the Jackson Hole. But again, doesn't matter because I'm going to tell you right now, the order flow that's going on right now, it's not about interest rates. Look at the bonds today. What is it? Absolutely massively unchanged. Bonds ain't doing a damn thing. That's why I said, I don't really worry about Jackson Hole. I can move bonds later. Right now, you need to worry about tech. Okay, you need to worry about, for the first time in a very long time, Microsoft looks like crap in a bottle. Okay, taking a look at Meta, recovered over there, tried for the corner and missed. Tesla, okay, mild sell side activity, but then we go to Broadcom. Oh, things are getting interesting. Okay, if the trend is your friend, that short-term trend is not friendly at all. The S&Ps could have a problem. Okay, keep this in mind. You can rotate all you want. These tech stocks, really, if these stocks start to go for it to the downside, those S&Ps are getting pulled underwater. And that, people, is the bottom line. And take a look where the S&Ps are closing. 64.11. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.